Wall Street ends lower as rising yields pressure stocks. Amazon and Apple beat earnings expectations. The Bank of England raises rates by 25 basis points. Stocks in the Asia-Pacific open largely lower, with the gift Nifty suggesting a flat start for the Indian market. Oil gains after Saudi Arabia extends its output cut and Russia decides to slash exports. Brent resumes its rally, trading above $85 a barrel. Higher yields and a strong dollar drag gold near a 3-week low. S&P Global expects India's GDP to grow at an average of 6.7% until FY31. Sees GDP rising to a decade high of $6.7 trillion in FY31 from $3.4 trillion in the last fiscal. Eicher Motors delivers a top-down beat in the first quarter with highest ever sales in the bus division. Telecom major Bharti Airtel also reports a beat across parameters, with average revenue per user touching 200 rupees per month. Big day of earnings for the market, with names like State Bank of India, Mahindra & Mahindra and Britannia expected to report their first quarter results today. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a Friday morning, but we do have a lot to catch up on, especially when it comes to global markets. So let's take a look at what the Asian markets are doing as we speak. Well, it's a mixed picture right now. So if you look at the major indices, Taiwanese index is trading in the red. It's down 0.4%, and the Hang Seng markets, they are up 400 points as we speak. So it's a mixed picture as far as the Asian markets are concerned. Nikkei is flat with some negative bias. We have the Straits Times, which is also in the red right now. Shanghai, though, is gaining up around 1% as we speak. And GIFT Nifty, that'll come up for you on the screen. And if we look at the implied open, comparing it with Nifty futures, that one is indicating that the start for our own markets could be flat or at least somewhat in the green as per the rates that we are seeing right now. 18 points higher is what the implied open is suggesting if we compare it with the Nifty futures. Let's talk about the US markets now. Wall Street ended yesterday's session lower. The Dow closed 66 points lower, while the S&P gave up 0.25%. The tech-heavy Nasdaq ended 0.1% lower. Meanwhile, as stocks struggled to shake off the pressure from the rising treasury yields after the Fitch downgrade, veteran investor said there was no reason to worry. He added his firm Berkshire Hathaway continues to buy treasuries. Okay, all right. On that note, let's listen into Ali McCartney, the Managing Director of UBS Private Wealth Management, talking about the outlook for the US markets.
Not only did we have the Fitch downgrade sort of highlighting something that we all really know and is in the back of our minds as U.S. citizens and U.S. investors, there's reason to be concerned. There's been really a Boolean optimism, not only in the narrative around the market, but also in the positioning around the market. So we're really at this point right now where we are priced to perfection, just starting August, which tends to be a pretty volatile month. And we don't have the Fed speaking for a couple. Well, we have Jackson Hole, but we don't have any Fed meetings or decisions for a while. So I think we're probably likely to see a little bit of volatility, which, is okay in the market.
Okay, all right. That is an expert opinion that we are getting in. But let's move on because the earnings front, tech bellwethers Amazon and Apple reported their quarterly earnings. While Apple beat expectations on all fronts, revenue was down about 1% on a YY basis. Amazon returned to double-digit revenue growth, beating analyst expectations on sales. Let us now get to the final update on our global market wrap this morning. European markets ended Thursday's trading session lower, with the French CAC down 52 points, the German DAX seeing an over 120-point cut, and the British FTSE closing 32 points lower. The Bank of England raised its key interest rate by 25 basis points to a 15-year high of 5.25%. The BOE's Monetary Policy Committee said they will ensure rates are sufficiently restrictive for sufficiently long to return inflation to the 2% target. Okay, all right, that's the global market action now. But how will these overnight cues impact our own markets? We have our own cues to talk about as well. We have our research team joining in with just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning and happy Friday to all of you. Ekta, let me come across to you first up. What are the market cues you're watching out for?
Thanks for that. Well, yes, the markets did close lower for the third straight session yesterday. We had the Sensex and the Nifty, which ended at nearly 1 month lows yesterday. Now, the FIIs have net sold for the sixth consecutive session. So, FIIs net sold a lesser amount, but nonetheless, they sold around 300 crores plus yesterday. DIIs net bought around 1729 odd crores. So, that is something that we need to probably watch for in terms of a trend and how that probably weighs in terms of the markets. Now, for the US markets, big tech earnings were in focus. Like you mentioned, Amazon gained post numbers, Apple lost around 2%, Airbnb, Dropbox, all of these companies came out with numbers overnight. Now, the US jobs data is due today, so that's going to be the big cue to watch out for. Estimates are 200,000 in July. Smallest rise since December 2020 is what the street is anticipating. Asia is currently mixed. US bond yields have pressured equities, so that is another piece of data to watch out for post the Fitch downgrade of the US markets. Brent crude oil is set for the sixth weekly gain, so that becomes a cue incrementally to watch out for our markets, considering that we are net exporters of oil. Now watch for buying at lower levels because we did see a recovery for the past two trading sessions from those lows. Stock specific action continues. Follow on selling in the Nifty Bank, which underperformed yesterday, and resilience in the broader markets, pharmaceutical stocks, considering that a lot of the pharmaceutical stocks will be releasing numbers, so that continues to be in focus. A lot of numbers today. State Bank of India, M&M would be top of mind along with Britannia, and we do have a couple of numbers tomorrow as well, such as Bank of Baroda, so the street will probably brace itself for a couple of these big bank numbers.
Okay, all right. Thank you so much, Ekta, for all those cues. Let's talk about some stocks that are on our radar today. Surbi has that list. Hey, Surbi.
Hey Sonal, so a lot of earnings on my radar. The first one is Eicher Motors. Strong earnings. It was a top-down beat. The margins are up nearly 110 basis points on a year-on-year basis. Came in at 25.6%. Bharti Airtel, the revenues were up 4%. The India ARPU touches 200 rupees. Lupin, the revenue was up 23%, EBITDA margins at 14.1% and profits at 247 crores. MGL, it was a big margin beat. Sequentially, the revenue was down nearly 5%, but the margins have come in at 33.9% versus an estimate of nearly 28%. Cummins, the revenues were up 31%, margins at 15.4% versus nearly 13% same time last year. Radico Khaitan, the revenues were up 26% and the EBITDA was up nearly 29%. Deepak Nitrite, it was a weak set. The weakness was led by the phenolics division. The revenues was down 14% and margins have come in at 12% versus 17% same time last year.
Okay, all right. Thank you so much for that. So those are some stocks that will be on our radar today. Let's talk about all the cues from the F&O space now. Manglam joins us. Hey, Manglam.
Good morning. So yesterday was a weekday, no two ways about that. However, we did see a recovery from the lows on the Nifty. It managed to close just under that 19,400 mark. The mid-caps were outperforming, so that's a bit of a positive. However, if you just take a look at the cash market, the FI is selling for 6 days in a row. The only positive here is that selling hasn't exacerbated. It's still around 200 to 300 odd crores, while the DII buying is there. However, what did exacerbate was the selling in index futures by the FIIs. 3,400 crores worth selling out there. And in that, a large part of that was short addition. 29,000 short contracts added for 7,600 long contracts which were unwound. As a result of which, the FII long exposure, which at the start of the series was 49%, has now gradually and suddenly gone down to 40% itself. In fact, at the start of the series, we were talking about how FII net long exposure is close to 33,000 contracts. Now that has turned into a net short exposure of 40,620 contracts. So that's telling you that there has been a fair amount of bearish positions being added on the index itself. Yesterday, of course, was also weekly options expiry, but the options that are active for next week, we have the 19,500 call, which saw a fair amount of writing. 19,400 call as well saw a decent amount of writing for a premium of 120 odd rupees, telling you levels upwards of 19,500 to 19,600 could face stiff resistance. On the other side, 19,400 put writers were active, hoping that yesterday's low of around 19,300 does sustain itself. But the texture of the market basically is that recoveries are likely to get sold into until Nifty reclaims key levels. What are those key levels? On the way up, we'll be watching out for the 20-day exponential moving average, which is the 19,544 mark. And on the lower level, 19,200 to 150 to 200 is an important support zone itself. For the Nifty Bank, going above the 50-day exponential moving average, which we broke yesterday, will be important to watch out for as well. And usually we don't only speak about F&O cues, but today we'll also watch out for how the US markets pan out. largely because of the big, upsurge that we saw in Amazon after markets and a downtick that we saw on Apple as well. Because basis that, there will be positions taken on our markets itself.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. With that, we'll slip into a break. SBI is slated to report its earnings later today. We'll get your preview after this short break. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Let's talk about some earnings now. Eicher Motors will be in focus today. The company reported very strong first quarter results with an all-round beat. Revenue grew 17% while margin was up 110 basis points at 25.6%. The domestic motorcycle market share has increased to 8.2% in quarter one of FY24 versus 7.8% in FY23. While for the commercial vehicles business, it was the highest ever first quarter sales of 19,571 units, and the bus division too registered highest ever sales of 4,907 units. Okay, reacting to the recent premium motorcycles rolled out by peers Bajaj and Hero Moto, MD Siddharth Lal says Royal Enfield is ready to take on competition in premium motorcycles. Listen in to what he had to say.
We've had waves of competition, right? We've had waves and waves of competition coming in different ways. The largest guys, the biggest brands, the global guys, the Indian guys, everyone's been coming in. There's no dearth of competition for Royal Enfield. And this is certainly one new wave. It so happened that there's a couple of chaps that came together, both as contract manufacturers, mind you. Maybe not being able to compete directly. So both really coming in as contract manufacturers for other brands. I'm talking about the Indian partners. But either way, there are new brands in the market as we speak, and of course we really take heed to what's coming in. Our new product, which is going to come out now in the next year, had been planned 4 or 5 years ago. Typically, then we're many steps ahead in many ways than competitors. We believe that competition, generally in our segment, more competition, should help grow the market.
Okay, all right. That is about Royal Enfield. But moving on, Sun Pharma reported a good set of Q1 earnings with its top line beating street estimates. Revenues grew 11% on a YY basis against estimates of a 7% growth. Let's listen in to what the company's managing director Dilip Sangvi had to say about the performance of various verticals.
We continue to invest in building a R&D pipeline for both the global generics and the specialty businesses. To update on global specialty with highlights for the quarter, in Q1 FY24, our global specialty sales were up by 21% to reach $232 million. Specialty R&D accounted for 35.8% of our total R&D spend for the quarter. We've made a proposal to the Taro board, and Taro board, as a response to our proposal, has formed a special committee. They need to finalize the lawyers and bankers and all of that special committee, and then at some point the negotiation will begin. We have no further update beyond what we've shared.
Okay, that's the word coming in from Sun Pharma, but we do have an important earnings day, and one of the most important ones would be State Bank of India. That'll be reporting its first quarter earnings today. Abhishek Kothari is joining us with the key expectations.
Well, watch out for the net interest margin. That will be the key to SBI's result today. Street is anticipating the best NII growth on a YY basis in last 28 quarters or about 7 years. The key thing to watch, as I said, will be the net interest margin. Analysts are pegging a 5 basis point decline in net interest margin by Morgan Stanley. However, we have seen with other banks that 10 to 20 basis point decline is seen in net interest margin on a sequential basis. Kotak Securities estimates loan growth of about nearly 16% YY and 2% quarter-on-quarter. Morgan Stanley estimates gross slippages of about 12,500 crore, which will largely be driven by the agri portfolio due to seasonality in nature. Kotak Securities also estimates operating profit growth of 110.6% YY, which has a base effect, and about 9% sequentially. Asset quality is expected to improve. Motilal Oswal expects 10 basis point decline in gross NPA ratio to 2.7% when compared to 2.8% in the previous quarter, and management commentary with respect to growth outlook will be seen closely. Two key stress portfolio, watchlist and restructured book, which forms about 0.84% of the loans, that movement will be seen closely. Our poll suggests NII growth of 30.5% YOY and about 0.9% sequentially. We are working with a profit growth of 161% YOY and a decline of a little more than 5% on a sequential basis. Back to you.
Okay, all right. That is what we'll expect from SBI's numbers. In fact, the SBI chairman will be addressing a press conference following the earnings at 2:15 p.m. today. Well, with that, we'll slip into a break. Up next, we get you the cues from the commodities market. Stay tuned for that. Welcome back. You're watching Power Breakfast on CNBC-TV18. It's time to talk all about commodities now. A lot of action happening there. Manisha Gupta is joining us with the update. Hey, Manisha, good morning.
Hi, morning, and thank you for that. Well, I'm talking about the crude oil prices, which are headed for a sixth weekly gain. Prices did gain 2% overnight. This is after Russia and Saudi Arabia both have announced extension in oil production cuts into the month of September as well. So Russia will cut it by 30,000 barrels per day. This is after 50,000 barrels per day of a cut in the month of July as well. And Saudi Arabia is looking to cut 1 million barrels per day to nearly 9 million barrels per day for the month of September. So big cuts coming in from Saudi Arabia, Russia. We also are already dealing with a big inventory cut in US as well by nearly 17 million barrels. So all of these factors clearly supportive for crude. Good going is what we've seen in metals also, where copper is trading close to its 3-month highs. There are expectations that China officials will make a statement today about stimulus measures. So ahead of that, we've seen buying happen in copper. Even steel is off its 1-month lows. A good buying in zinc and aluminum as well. So overall, the metal pack has opened in the positive.
Okay, metals back in the positive. Thank you, Manisha, for joining us with all those updates. Moving on, releasing its decade-ahead forecast for India, S&P Global says it expects India's GDP to grow at an average pace of 6.7% until FY31. It also said India's GDP could double in 6 years as economic data would come in strong. The agency believes India's short-term economic growth will be driven by a 678.6 million strong labour force. All right, that is S&P Global on India's GDP. With that, we'll take your leave on this edition of Power Breakfast. Have a great Friday. Bazaar Morning Call comes up next.